Good afternoon, ladies.
Good afternoon.
Hi.
Good afternoon. How is everybody?
Everybody looking lovely.
I know you guys look so beautiful.
Hi.
Facebook, LinkedIn, YouTube, everybody. Y'all ready to get started?
We are ready.
Let's do it. Let's go.
All right.
Nat?
All right. So I am Nat Armour Johnson, Client Care Director at RETAG.
Hi, I'm Melinda Talbert, your real estate tax queen.
Hey guys, I'm Cassie McGowan. I'm your senior tax advisor.
Good afternoon. I'm Erica Hayward, your senior tax resolution expert.
Hi, good afternoon. I'm Josie Harris Walton, your tax attorney. And we are
your real estate tax advisory group.
Yes, and we help real estate professionals resolve their tax issues permanently. Tax problems as a realtor takes time away from you growing your business.
Yeah, I'm a commercial realtor, so I kind of got the best of both worlds, right? An issue that I run into a lot when I'm having a conversation with realtors about their taxes is, girl, I owe. Girl, the alphabet boys after me. Girl, I this, girl, I that. Like, a lot of realtors really don't understand estimated quarterly tax payments and the consequences that comes behind it if they don't pay. So today our team is going to touch on the do's and don'ts of the estimated quarterly tax payments, and hopefully you all have a better understanding on how the estimated quarterly taxes payments work.
Absolutely. I like that. And today's tax topic is how tax problems can ruin a realtor's business. So let's talk about it, ladies.
Yes, let's talk. So, help the people understand exactly what estimated tax payments are.
So, estimated tax payments are the reason business owners hate being business owners. As a W-2 employee, your taxes are already withheld from your paycheck. It's a no thought process. But if you're a self-employed individual, single member, LLC, partnership, S corp, even C corp, there are no taxes withheld from the money you make. Therefore, you are responsible for remitting those payments to the IRS on a quarterly basis based on your net income. You are responsible for all of that. And if you don't, you get in trouble.
Yeah,
you do.
A lot.
You definitely do get in trouble.
E mentioned quarterly. Break down those quarters and help them understand when she say quarterly, what does she mean by that?
Okay, so basically there are 4 quarters in the year, of course, we understand. So your tax deadlines to get those payments in are April 15th, June 15th, September 15th, and January 15th. So those are your deadlines. They're the 15th. I know most people are more familiar with the April 15th deadline, pretty much just thinking that you go ahead and you work and then you pay all of your taxes on the 15th. But now it's kind of incorrect information. Your taxes are due quarterly. People get a little confused with that because when you don't work, and you're not going through a payroll system, whereas your taxes are withheld, your payroll company is doing the work of doing those calculations. So when you work independently, you have to be responsible for making those deadlines.
Yeah. So to piggyback off of what Cass said, I call her Cass, y'all. This is my boo-boo Cassie.
That's great. Cass is great.
Piggyback off of what she's saying is, so April 15th, that's the individual tax deadline. If you are a W-2 employee, that's your deadline. But if we're talking to realtors, and the same goes for small business owners, but realtors are our babies, and that's who we are helping, and that's who we're talking to today. But this applies to all small businesses. If you have income earned between January 1st and March 31st, your quarterly tax payment is due April 15th. If it's income earned between, I think it's April 1st through May 31st, your second quarterly tax payment is due June 15th. And so on. So that's how it works. You don't just pay $100 each quarter. It's based on the income earned through those quarters.
Mm-hmm.
That's right.
Okay, so we had a few questions that were emailed to us that I wanted to make sure I got to because they were some very important questions and topics that you all need to know. So one of the questions were, can I pay my quarterly taxes when I file my taxes April 15th? You wanna give them a spiel on that?
Yes, I can. So as much as the IRS, they want to get paid. They do. They do. So I mean, you can do that. But the thing is, if you don't make quarterly payments that equal 90% of your current tax bill or 100% of your prior year tax bill, well, you have to pay a failure to pay penalty. And that failure to pay penalty, I want to make sure I'm right. It's 0.5% for each month or part of a month, up to a maximum of 25% of the amount of tax that remains unpaid from the due date of the return until it's paid in full. That adds up, y'all. Go ahead and make these quarterly tax payments. Just let's not even go through all that. And if you file late, you have a failure to file and failure to pay penalty. So we want to make sure that you're not having all that. So let's just skip all that and pay the taxes quarterly.
Right.
Just make the payment. Yeah.
How do we pay those taxes? That's another question.
All right. So the IRS, like E indicated, makes it very easy for you, but we don't do it, right? You can go online at irs.gov/payment. You see how I memorized that to pay your taxes, right? Or you can mail in the vouchers that your tax preparer gives you every single year. So again, make sure you're making those quarterly payments either online or by mailing in those vouchers.
Right. Yeah. And something that I want to make sure that you all understand is, in addition to the interest and penalties that you get for not making those payments, something very embarrassing can happen. Like, you can have a levy issued, you can have a lien issued, and when you get those big old commission checks and you have a lien filed against you, guess what? They can garnish your commission check. You do not have to be a W-2 employee to have your wages garnished. They'll take that check. So I know a lot of realtors' incomes are inconsistent. Like, we can go 3, 4, 5 months sometimes without receiving payment, and then you receive this big old $25,000 check, and your mind is getting your bills out the way. Please understand that it's very important to make your tax payments. That $25,000 check can turn into a $5,000 check because the IRS will come in and they'll snatch it away from you. So I'll let our favorite tax attorney, Josie, give you some spiel on the litigation issues that you can run into if you don't make these payments.
Yes. So you can actually have issues like tax fraud, tax evasion, tax avoidance.
Tax evasion today, y'all.
Yeah, tax evasion, tax avoidance, all kinds of issues, as well as you can actually have civil issues as well. Let's say, for instance, you don't file your estimated, and they decided they're going to audit your tax returns. So now, not only do you have a estimated tax issue which you didn't pay, now they're going back and looking at all your income and deductions, and now you have an audit. And then you get an audit, and then, of course, you don't hire a retag to take care of the audit, and you go in yourself, because that's what a lot of us do. Think we can handle it ourselves, go in there without paperwork, and they say, you know what? No, you still owe this money because I don't see any receipts or anything like that. And then you get that big thing called a notice of deficiency, and you end up in tax court. And all of this stems from not filing your estimated taxes. And it's so important to do that and and talk to your accountant about calculating those as well and how you should calculate those.
Yeah.
But yes.
Awesome. Okay.
Can I say something?
Yes, please.
Let me just say something. So another thing is, we think that when we're making estimated payments, that we're making payments based on your commission check. You're not. You're making payments based on your commission check, minus what you paid your staging person, minus your FMLS fee, minus your super key, minus your cell phone bill, minus your virtual assistant, minus the broker fees, transaction fees, minus all that. So while you're thinking you're making a payment of 15% of $25,000, it may not end up being that much by the time you deduct everything. And then if you meet with RETAG for a tax planning and consulting, we can get that bill down a whole lot. But the thing is, you can't wait until you're sitting in an office having your taxes filed and want to implement all these strategies. 2021 tax planning started in January.
That's right.
It does not start when you come get your taxes done. So if you want to be proactive about this and not make these huge tax payments, you can speak to us about structuring your business properly, about what's deductible, what's not, so that the payment is not huge. So while you think it's so daunting, I promise it's not. Okay.
It's not.
It's not. It's not. So I just wanted to tell you guys that, because I don't want you thinking that you got to make a payment of 15% of your $25,000 commission check. And that's probably why a lot of people don't make the payments, because they're uninformed.
Yeah.
So I just wanted to tell you that.
I'm glad you mentioned that, Eve. That's a very good point. And to piggyback off of that, there are a lot of tax professionals that don't understand estimated quarterly tax payments. So make sure that you are going to a very knowledgeable tax professional that understands estimated quarterly tax payments, that understands S Corp, that understands C Corp, that understands all the different entities. Because if you're going to somebody that just started taxes, they are putting numbers in the appropriate places, but they don't understand tax planning. So you're probably paying $25,000 in estimated quarterly tax payments, when really, if you went to somebody that knew what the hell they were doing, you wouldn't be paying that much.
Mm-hmm.
So it's very important that your tax professional or your accountant or your CPA, whoever is handling your finances, make sure that they're educated about the quarterly tax payments and how that works.
Mm-hmm.
And if I may, let me say something that can kind of help our audience to remember, because we get a lot of questions, right? But one of our favorite that we kind of laugh at is when an independent contractor receives their 1099, they ask, well, what do I do with it now? Guess what? Our response is generally, what did you do before you received that 1099? So again, someone definitely RETAG to begin planning so that you don't have that question in terms of what do I do with it now? With RETAG, we're going to handle your tax issues, right? Permanently. We're going to make sure that you know exactly what can be used and what cannot be used as deductions. And you're going to you want to plan each year going into that year knowing what I'm going to pay in regards to quarterly estimated taxes. So remember that. Plan.
Yeah.
Mm-hmm.
That's right.
And I know it sounds like a lot, but it's not a lot, because when you have someone else doing it for you, it gives you that breakdown. It alleviates that stress so that you don't have to worry about it. We worry about it for you. That's our job.
That's right.
If you all haven't read the E-Myth book yet, and you are self-employed or 1099 independent contractor, I highly suggest you read that book. It kind of breaks down in so many words. It's telling you that you can't be everything in your business. Like at some point, you're going to have to hire an accountant or a CPA or tax attorney, business attorney. At some point, you're going to have to hire a business team to take care of your business, right? Because that's not what you do. You sell real estate. So you go sell real estate and let us do what we do.
Exactly.
The fun thing is, some people who do taxes don't even do their own taxes.
October 15th is coming up, and I have not filed my taxes.
We're so busy too. It really is a thing, because it's hard to keep up with everybody else's stuff and your stuff. So we completely understand. Like, it is a common thing. So it is okay. It's okay to not know, and it's okay to hand it over to someone else who does.
That's right.
Josie, can you explain to them the importance of selecting the right entity? Because again, there are some tax professionals that don't understand anything outside of a Schedule C.
So, with Georgia, we have LLC. Well, you're sole proprietor. Sole proprietor means that you haven't registered your company with the Secretary of State. And you're probably maybe using an EIN number. just for banking purposes, but you're not registered. So you're a sole proprietor, which means that, to be honest, this is what I tell my clients. You're a sole proprietor. That means that if something happens where somebody try to sue you, they're going to get you and your children.
Yeah.
And they want your children then and your children's children. So I don't agree with sole proprietor, but hey, some people like to do that because they don't want to register their companies. And then you have the LLC, which is a limited liability company. So most of those, they are pretty much shield over the LLC, be limited. And then they're also filing their Schedule C tax returns as a sole proprietor as well. And then you have a S Corp. So understand that S Corp is just an election that you make with the IRS. A lot of people think that S Corp, you're going to find it on the Secretary of State website. You're not going to find it on the Secretary of State website. It's going to be you are an LLC or a C corporation, and you elect to be an S Corp with the IRS. And that makes you, S Corp. Then you file the 1120S for that. And then also we have a C corporation, which means you are a shareholder, which in S Corp, you're a small shareholder as well. C corporation, you are a shareholder. Good. The only thing about a C corporation and an S Corp is a C corporation is by itself. It's an entity all by itself. The rest of the ones I just talked about is a flow through. And I forgot about partnership. So partnership is where you have two or more people, and maybe you're an LLC or two or more people. You are taxed as a partnership. You're not taxed, or you can be taxed, I guess, as a membership, but you can be elected to be a membership partnership, which is a 1065. So, and then I go back to the C corporation. That's an entity by itself. So you have to understand that that's the difference, and it files in 1120. So those are the different entities that Georgia has. And then there's other entities in other states, but Georgia, this is what we're talking about, maybe Georgia. So
yeah, and when we say corporation, it kind of make them cringe. I don't understand why people are so afraid of corporations, because if you are a Schedule C filer, you might be paying more in taxes filing as a Schedule C. If you are grossing over $100,000 as a realtor and you still filing Schedule C, I want you to look your tax professional in the eyes and ask them why. What's my benefit of still filing Schedule C? Like, what are my other options? Because it depends on your situation, but a lot of realtors, S Corp can benefit you a whole lot. Do y'all agree?
I agree, but I do.
Because like with the it's what 15 point something percent for the Schedule C, but the S Corp is like
3%.
Yeah.
Self-employed tax.
Mm-hmm. Yeah. And so, but you also have to understand, like, if you are a realtor and you're doing S Corp, you need to make sure that you're ready to file. You pay yourself tax. I mean, pay your payroll. That's one of the things I've seen where a lot of people get messed up because an accountant or whoever does not educate them on, if you are an S corporation, you are required to pay a reasonable, I say that again, a reasonable salary to yourself. Right. So therefore, be ready to pay that salary. And if you're making $100,000, you're ready to pay yourself a salary. You are. You may not think you are, but you are. And you can pay yourself commission or whatever you have to do. You don't have to pay per hour or a certain amount every month. So just remember to do, that you have to be ready to pay yourself payroll as well.
Okay. You was about to say something.
Let me say something else. And for you guys, payroll is not transferring money from your business to your personal account. That is not payroll, y'all. Don't come in here saying that you paid yourself payroll and that's what you did, because you didn't. So payroll is actually using a payroll provider and running payroll so that at the end of the year, you will have a W-2 from your company. Right. You will have it. You paid payroll taxes, you paid unemployment taxes, you paid taxes. You have a W-2. And another thing about the benefits of the S Corp is, as a self-employed individual, it is hard for you guys to get financing for things. It is hard for you to buy homes. It is hard for you to do stuff. So if you have that W-2, you cut out a lot of the mess. You just cut out a lot. Yeah. Also, if you take the S Corp election, your tax return due date is not April 15th. It is March 15th. If you come in trying to file that S Corp in April, you are going to pay a late fee of $205 per month per member of the business. You
say that say that again, per month
per member.
Yes,
$205 per month per member for a late S Corp return. You get one get out of free card every 5 years. So if you get a late fee, I can get you out of one. You're going to pay me to get you out of it, but I'm going to get you out of one. After that, you're on your own because I told you. We told you when it was due. So yeah, that's number 2. So it's not due when you file your personal tax return. It's due a month before, because what happens is, like Josie said, it's a pass-through entity. When you file that S Corp return, you don't pay taxes on it. You get a K-1 form, and you take that K-1 form and you file it with your personal. So for you guys thinking, well, is this going to show on my personal tax return from the income from the S Corp? The answer is yes, it will. Okay. And I had a third thing. The third thing was, that was it. Payroll, due date, and the late fees. So I want you guys to understand that, because a lot of preparers and accountants will rush somebody into taking the S Corp election because the tax return costs more, they get paid more, but they don't educate you on what it is you need to do. Please understand, and a lot of y'all don't like to follow rules. There's rules with that S Corp, and if you don't follow them, and you can't pick and choose when you want to be an S Corp. And I know I'm a little long-winded right here, but this is important. You cannot pick and choose when you want to be an S Corp. You can't say, oh, well, I made a lot of money this year, so I want to be an S Corp because I made a lot of money. But next year, I didn't make a lot of money, so I want to file as a single member LLC. You can't do that. Once you're an S Corp, that's it. If you continue doing that, what's going to happen is you're going to have missing returns. You're going to have those late fees. They're going to pile up, and we can't get you out of them. And the IRS can even revoke your election. So it's serious. While it saves you money in taxes, there's responsibilities associated with it. And I want to make sure that you guys know that. Yeah. And that's my TED.
And to piggyback off of that, they don't realize that once they take that S Corp election, you got to wait 5 years if you want to become a C Corp, or if you want to change. You have to wait 5 years. You can't, like she said, you can't be a S Corp today, this year, and then next year, dang, I ain't have as many sales as I did last year. I'm just gonna file a Schedule C this year. No, boo, you can't.
Blood in, blood out.
Yeah. So again, make sure that your tax professional is knowledgeable. Erica is an enrolled agent, and I can stand on top of this table right now and give y'all a happy dance, because I have successfully passed all 3 portions that is required by revenue service to be an enrolled agent. If you are in the tax industry, you understand how hard it is to become an enrolled agent. Like going in for that test, it took over my entire life, but it's well worth it.
It's like one step under being a tax attorney, guys. Like it's a big deal. It's a really big deal. Yeah. Congratulations on that accomplishment to both of you.
Congratulations.
Definitely. There are I can't remember the exact count, but I know there are over 1,000 P10 holders in Columbus, Georgia. Guess how many enrolled agents it is?
Tell us, girl.
Less than 20. And your girl is about to be an enrolled.
Yes. That is awesome.
We're so proud of you. We're so proud of you.
Absolutely. Y'all support. I can cry, because they just don't understand how hard it was. It's not easy. And I don't care how long you've been doing taxes, baby. When you start studying for that enrolled agent exam, it's a lot of stuff. I just started like, what? Like with bases and estates, and it's a lot. Like you have to know every part of tax
it's
law.
the thing, because when you're in this profession, you know what you know, and you know a lot. But then when you start studying for the EA, you start learning about things that you didn't know that you need to know, things that you don't encounter on a regular basis, because you just don't encounter it. Like every situation doesn't require for it. So,
and can I just say something in terms of words of encouragement to you, MJ? Thank you for all that you do. I heard you say something in terms of I passed and the studying. You passed for all of us in terms of being an EA. We saw the blood, sweat, and tears, the sacrifices. So just a moment, I'm not going to cry, but just a moment in terms of Thank you, both you and E. Thank you, thank you, thank you.
Thank you. So
Game changer in the industry.
All parts of Georgia, all parts of the U.S. If you can afford an enrolled agent, I'm not bashing y'all regular tax professionals because I was once a regular tax professional too. But what I'm saying is there's a level of knowledge, tax law expertise that an enrolled agent has that can't be touched.
Yep.
So if you can afford an enrolled agent as your tax advisor, I would highly recommend that, not because of the designation, but because of the knowledge. That test is not easy. There are 3 parts to that test, and it's 100 tax law questions that you have to know to pass all 3 portions of that test. So if you can connect with enrolled agent, I promise you, some enrolled agents, depending on what your situation is a whole lot better than a damn CPA. I'm telling you now, a CPA and an enrolled agent is totally different. If you're dealing with a tax issue, any type of tax resolution issue, unless your CPA is they specialize in tax resolution, I don't recommend you going to a CPA to resolve your tax issue because
and that's not to bash CPAs. It's literally 2 different arenas. It's like, going to a podiatrist for a dental issue.
Yep.
It's 2 different arenas.
Yeah.
So you have to make sure that you're following the correct person.
Yeah, share your experience because you experience both.
So I started studying for the CPA exam in 2010. And the tax part of the CPA exam is this much. For the EA exam, it's this much. It's a whole lot more. It's a lot more. And so you learn so much. And I've been doing this for a very long time as well. And I'm not ashamed to say that I learned a whole lot studying for this exam. There was a lot I didn't know. And there was a lot that you learn more so not to rely on the software. And to really go by what you know. So if you're looking at this return and reviewing it, you're like, okay, wait, this is wrong because I know that I can do X, Y, Z. So let me go back through this software and I may have to uncheck a box or I may have to check a box to make sure that these tax laws are coinciding on my tax return. And that's what makes the difference between a tax preparer and an enrolled agent, or a tax preparer and, let's say, someone who really knows their craft. Like I said, I'm not bashing anybody else. I can only speak on what we know here. And that's what we know here. If you have tax issues or you want tax stuff, holla at us. just
love it.
Exactly. Can I just piggyback off of something?
Yes, please.
Oh, I'm not piggybacking. I'm sorry. I want to kind of go back to the estimated taxes, if y'all don't mind, real quick before we go into the celebrities segment.
Yeah.
Okay, so I was I forgot about this when I was about to say it, but when you have estimated taxes, or when you are an independent contractor, or you're supposed to be estimated taxes, and you try to do like a resolution or like an OIC. I don't know if you guys experience that. If you do an OIC, they will kick back and cancel your OIC if your estimated tax has not been paid. And so pretty much we always go through and verify if you are you're a Schedule C filer, then you need to make sure your estimated taxes are paid, because that means you're not in compliance with the IRS. And if you're not in compliance, you cannot do an installment agreement. You cannot do an OIC, any of those resolution things. So that's one of the important things I wanted to say about estimated taxes. And I forgot at the beginning. I'm sorry.
Okay. All right. We have some celebrity tax tea.
The tea.
Listen, when we were talking, I'm gonna tell y'all what's so beautiful about RETAG. We all love tax law. So normal girlfriends get together and they talk about them, they, and him and her. We talk about taxes. We talk about tax cases. Like, we kind of speak our own language, right? So when Cass brought this tax case to us, we were all so excited because we was like, ooh, like we're just not normal. We tax cases and tax law excites us. So I'll let Cass kind of break down the celebrity tax. What is he? The antivirus guy?
The antivirus guy, John McAfee.
McAfee.
So yeah, so you know how you see your antivirus is expiring. Please click on the McAfee. So that's who we're talking about. We're talking about John McAfee, and he's like a huge just software mogul. I mean, everyone, of course, you know who John McAfee is. So essentially what it is, he was indicted, I believe, for tax evasion. So he essentially was completely evading, not paying his taxes. He refused to pay his taxes, like outright. It wasn't like he didn't know he wasn't paying. He strictly just said, I'm not paying my taxes. He was also hiding income in cryptocurrency accounts, putting income in other people's accounts and other names and things like that, doing whatever he could to literally evade paying these taxes. So this kind of caught up with him, actually, in a big way. And he apparently felt like he was above that and he was not going to get caught, but he got caught. So once he got caught, unfortunately, he did, according to, I was just reading, he committed suicide. He was found June 23rd. He hung himself in his prison, kind of right outside of Barcelona. And it really goes into a lot that we talk about in terms of paying these taxes and not understanding the severity and the things that it can really do to your life, because it really is a trickle down effect.
Yeah.
Because, he thought when he, went over there to Spain, oh, he was going to be safe. It's like, no, but it was approved that he was going to get shipped right on back here and he was going to have to pay these fees and do this time. And mind you guys, this is a large amount of money. He's doing speaking engagements, all the software that he's doing and things like that. So I don't even know the full amount of what they were saying he owed. That's something I could definitely look up though. But this could be really damaging.
I don't mean to cut you out, but there's a disclosure that we need to make. Josie, can you make that disclosure? I completely forgot.
Yeah, so y'all know I'm a tax attorney in the group, so I'm always talking about, hey, each candidate. So you understand that he was indicted, which means he was charged, but he's never actually been convicted. So we're going to say the disclaimer. We know that he was indicted, but he was never actually, no judge actually did a judgment on him. He didn't settle or anything like that. He was just charged. So technically he is innocent until proven guilty, but we're still going to tell you a little bit about the different things that happen so you can know what can happen if you don't pay, you have tax evasion.
Right. So, yeah, and that's where we are with it. Like Melinda was going into, like levies and holds, and it's pretty much a situation where you can literally lose your whole world in an instant, just like that, from not doing the simplest of things.
Yeah. And I've experienced firsthand suicide conversations. Like, some people owe so much and they're under so much pressure with the Internal Revenue Service that they'll be like, I might as well just kill myself. Because the quotes that you all hear about death and taxes, like, that stuff is true. And even when you die, you still have to pay taxes.
Right, exactly.
On somebody.
Yeah.
So let's jump into the case. Let's talk about the details of the case. Joe, before we get into it, kind of explain to them what tax evasion is. Was that one of his charges? Tax evasion?
Yes. It was tax evasion, yes.
Okay.
So tax evasion is most of the time, it's like evading taxes. So what happens is you don't file the tax returns, or if you file them, you're actually putting fraudulent information on there. And that's kind of what they were saying was, could be done. Could he have done or whatever. But yeah, so you got to understand it's a difference between tax avoidance, tax evasion, and then tax fraud. So tax evasion, tax fraud is kind of almost the same thing, but what his issue was, he pretty much evaded taxes by not preparing or not filing any taxes. And we know a lot of people do that. They actually will go 10, 12 years because they're like, I just don't want to pay. I know I got to pay, but I don't want to pay. And I'll just go ahead and I'll just not file my taxes. And technically file, even if you don't pay, because of the fact now you have, there go tax evasion, because you pretty much did not file your tax returns. And that's pretty much what he did.
Yeah.
So even if you can't afford to pay, you still should file.
Oh, of course.
Yeah.
Of course, you have to file. That's something that we have to do. A lot of us don't want to do it.
Yeah.
But we all have to file our tax returns. Because if you're not filing, that means you're not giving your part of the taxes, which we all have to. Don't get me wrong. I don't want to pay taxes. I want to pay what I'm supposed to pay at the end of the day. But we all have to file the return and let the government. And that's another thing. When you don't file, you don't let the government know what you're making, and they don't know what to tax you on.
Mm-hmm.
So pretty much, you just evaded taxes. Totally.
So may I ask a question, Josie, in terms, because sometimes you have to hear things in a different way, right? So is it safe to say that if I don't file my tax returns, I'm breaking the law?
Yes.
Okay.
You are breaking the law. Yes. And I don't know you guys remember, but his was 2014 through 18. So 4 years. But even though, sometimes they don't, they say they'll count people 10 years or whatever, but you're talking about 4 years of a lot of money.
Yeah.
So 4 years of millions of dollars, assuming, because we don't have an exact number, because they didn't get into that, because of course, right before when he got indicted, it opened up the case, and then he was about to come back over to the United States. He, killed himself. That's what they're saying. We don't really know what happened. He died. So he couldn't take it. He was like, they're going to make me pay all this money. They're going to put me in jail. And actually, his jail sentence was only 5 years.
I saw that.
Yeah, it wasn't even.
Isn't that interesting?
But
I think about when you're in that level.
I'm sorry.
Oh, sorry. Go ahead.
Was the 5 year, because he had several counts. Was that for all the counts or just one?
Well, that's probably what he would have probably done 5 years, because I don't think he had any other issues before. So I think he would have got a minimum of 5 years, according to, because, with federal is according to the amount of money, and then actually what you did. And if you actually had any other cases, so it goes by the amount of money of controversy, which means his controversy probably was only 5 years. And that's what they were expecting. But they didn't know what else was going to come after this, because we won't get into that. But he had another case for the SEC, the Security Exchange Commission. So we won't get into that. But so that was another situation he was going to have to deal with. So, yeah.
Well, he didn't just not pay taxes or file his taxes. Like, isn't there a video out there of him saying that he don't believe in paying taxes?
Oh, the Twitter. Yeah.
I don't know if he said that, but I know he said that he did not pay. He actually said he did not file taxes. He did not pay taxes. I don't know if he said he was not going to pay taxes, but he definitely said he did not file and he did not pay. That was right before he actually got arrested in Spain. He said this. He was on a yacht. And another thing about it, not only that, he actually, what they got him on invasion was, he actually was hiding money from the government. He was putting like a yacht, and all those things were in someone else, a nominee's name or something. They said a nominee's name.
Yeah, stop putting that stuff in other people's name, because they're gonna know. You cannot outside.
They're gonna know. Like, what's the TikTok? How would they know? How would they? Oh, they're gonna know. They're gonna know.
Going back to Melinda, what we always say is that you talk too much. Yeah. Like, just pay your taxes, okay? Just pay your taxes.
He talked too much.
Having a conversation the other day about.
Oh gosh.
I don't know how much truth is to it, but they say once you're born, your social security number is what?
You're on mute, babe.
I remember this.
He talked to us about that.
Yeah, do not go down conspiracy theory YouTube, okay? There's your social is your routing number. It's a code on the back of your birth certificate that shows account number, and you are a corporation already, and you can pay Georgia Power with your social. And y'all like, no.
Why?
One of my friends came and told me that one time, and she was so serious, and I was like, well, baby, you go do that and you let me know how it goes. But let me know. But when Josie was talking, I want to say something else about what she said. People try to evade taxes by not filing. Y'all, whatever 1099s, W-2s, 1099 INTs, 1098s, 1099 S's, 1099 C's, y'all, the IRS already knows. They already got it. They already got it. And the thing is, if you try to take this route and not file your taxes, the IRS can file for you. And when the IRS files for you, they'll give you no deductions. So you end up owing a lot more. And then you have to go do a substitute for a return and blah, blah, blah. And let's say that they even owed you money. If they owed you money and you filed more than 3 years after the due date, you don't get the money. You don't get it. And then also, if you never file your taxes, tax returns have statute of limitations, just like crimes. If you never file a tax return, you never close your statute. For most people, the statute closes 3 years after you file. So let's say in 1983, you had a 1099 for selling a property and you never filed your taxes because you were scared that you was going to owe money for selling that property. You know, they can still collect that money from you.
Yep. 20, 39, 99 years later.
You know? So, I mean, it's just
filed it. Then you start that statute of limitation.
Right. So I say all that to say, like, 9 times out of 10, 10 times out of 10, it's not going to be as bad as you think it is. Yeah. So let's not do that.
And also, you have the statute of limitations for 10 years as well, where if you owe money or it's, it's the time it was assessed, which means, let's say you file your tax returns in 2008. It was assessed in 2008 when you filed it. 10 years from that, if you owe any money, 10 years from that date, that money's wiped clean. But if you don't file the returns, that doesn't happen. And if they do a subsequent return, it doesn't happen. So you lost your chance to get a 10-year statute of limitation if you owe, and you can ditch and dodge from them for 10 years. I don't know how you're gonna do that, but and you won't have a tax debt after 10 years. But if you don't file, then you're just opening yourself up for a whole different kind of thing.
Yeah. So in plain English, what Josie is saying is the IRS has 10 years to sue you. But if you never file, it doesn't start.
It's infinite.
Yeah. Let's go to some questions. We have quite a few questions on here.
We do, NJ.
I see one of my favorite CPAs in Columbus, Christopher Smith. Christopher says that he recommends a balance sheet and an income statement to be used to prepare business tax returns. Let me talk about that, Chris, real fast, because let me tell you what I don't do. Okay, I still file business tax returns. I'm honestly trying to move away from filing tax returns altogether because I just love tax resolution so much. And I hate bullies, and the IRS is a bully, and so that's my sweet spot. I like to fight bullies. But back to his question: if you come to me and you're a business owner, hear me well. I will not make an exception for you if you don't have your books and records in order. Hear me well. If you don't have your books and records in order, please don't call me. Don't send me no spreadsheets. Don't send me no emails. And you damn sure ain't finna send me no box of receipts.
No.
You are grossing $100,000. Y'all got to do better. Stop trying to be your own accountant. Invest in your business. It's not a bill.
Right.
Your finances portion of your business, that's the most important part. Y'all are so worried about these big old photo shoots and a lot of shit that don't even matter, really. If your finances isn't in order, your business is not going to grow. I can promise you that. You can't get no loans. You can't get any loans if your finances aren't in order. A lot of you missed out on a lot of grants that the government gave out during the pandemic. Guess why? Because you didn't have your taxes filed. You didn't have your finances in order. Y'all, please do better. Do better. Yeah. I don't do bookkeeping at all. My partner E does bookkeeping. We have another partner in New York that does our bookkeeping. And there's a CPA on the live right now, Christopher Smith. I highly recommend Christopher. Go and see him before you have to come and see me. Yeah. Because if you don't, I can promise you, if you're not filing your taxes, you're going to have to call RETAG at some point.
Yeah.
Yeah, that's right.
You are. And if
And
you
let me
forget
say something.
anything that MJ has stated, go back to look at the live. We're not doing it because here's the thing. Why would you want to pay the IRS penalties and interest when you can actually have someone retained to represent you to take away your tax problems? At what point of business owners are we going to get smart and do the right thing? You
Right.
see with the celebrity case we just announced, you're not going to run away from the IRS. Those bills keep piling on and on and on. And whether whatever type of business owner you are, if you're a celebrity, they're going to get their money.
Yeah.
Go ahead, Josie. I'm sorry.
Oh, I was going to say, and also I think that, and I represent tax preparers regarding due diligence penalty. I'm going to say really quick. And I think that tax preparers should not even file your tax returns if you don't have yourself in order. Let me tell you why. I was on a hearing, a due diligence hearing, and she pretty much ate her up for Schedule C stuff, and she hadn't verified the information for the client. And you got to verify, you got to look at bank statements, you got to look at all these things. And if you already have something in QuickBooks or whatever, that tax preparer don't have to look at all that stuff because it's already there and you've already did your job. But now she may have to pay a penalty because she filed somebody returns who did not have their stuff in order, and she just allowed them to put the information down on what they said their income and deductions were. So if I was a tax preparer at this point, I would not be doing that. If you don't have your Schedule C together regarding like credits and stuff, now businesses are different, but Schedule C's, when you got credits, you getting earned income credits and American Opportunity credit, things like that, they can get in trouble because you don't have your stuff in order.
And those penalties are for tax preparer is per incident. It's not per case. So you can pile up really, really high. I highly recommend all tax professionals to read Circular 230. Yes. You should not be preparing anybody's taxes if you're not knowledgeable on Circular 230.
I'm gonna put that in the comments. Hey, MJ, we have a question that's one of my favorite questions. We'll see which one of the retag girls is going to answer it. What is the best advice for a new realtor coming in the first year?
Ooh. Get your shit in order.
I'm gonna say have your
right.
a good bookkeeper, keep yourself.
Man, y'all were supposed to say call retag.
Call retag too.
Call retag, get your tax plan together.
Definitely.
Right. You properly.
No,
because the thing is, you don't know what you don't know.
Right.
Yeah.
And that's the thing. So you have to go find the information that you need to know, because when you're starting a new business, it's not like you're just going to know this information. So when it comes to keeping books, you have to find someone who is knowledgeable about it, because a lot of new business owners don't know what they need to keep. They don't know what they need to discard. They just don't know. So you need to solicit a company like Retag,
right,
who can, advise you on what you need to keep and what you don't need to keep, so that you can have all those things in order.
I agree. And in all honesty, I think you really do, even if you don't hire us as your tax advisor, go somewhere and get a business consultation before you even start. Because depending on your situation, everybody's situation is different. I don't know if being a realtor, are you a realtor full time, or do you have another job? Like a lot of that comes into play in what your entity should be. So if nothing else, you have to stop looking at a tax advisor, a CPA. You have to stop looking at us as a bill. You have to look at us as an investment in your business. Make that investment. I think investing in an advisory team is way more important than a photo shoot. Trust me. Because if you start off on the wrong foot, it's going to be hard to transition and get you right. And you're going to end up paying way, 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 way more than you would have if you would have started off on the right foot.
Yeah, that's right. And then you have a team, and again, the goal is to set your business on the right foot. You have a team of females, right, that are banded together that will do all the work for you. Would you rather pay our retention fee or thousands and thousands of dollars to the IRS because you chose not to plan, and we're offering you a free consultation in terms of education and getting your business in order. So I just want to say thank you. I'm going to call you CK because I don't want to butcher your name, but thank you for that question. That's one of my most favorite questions, especially with new real estate agents.
If I might.
Go ahead.
One more thing I would say, this is really important because I never had one when I was coming up into business. Get a good mentor. There's a lot of free mentorship programs out there. I know SCORE is one people talk about a lot. Get a good mentor because they can kind of put you in contact with these different entities that you need to know about. A good mentorship.
When I first started, when I first became a realtor, that's something that I kind of wish I would have done. But, you know, I was a business owner and I thought that I could do it, right? But I found out real fast that residential real estate, it ain't for me. No, I can't do it. It takes a lot to become a successful realtor on the residential side. And I see that becoming a realtor has become a trend. But people, when you get in it, you realize it's not easy. So I applaud every successful realtor out there because it is not easy being a real estate agent at all. And like Cassie said, start out as a mentor with somebody. Mia Mans, Scoop McCullough. Like there are a lot of amazing realtors in Columbus and Atlanta. I have a lot of good realtor friends in Atlanta as well. Amisha Mason at KW is amazing. Like, stop trying to do it all on your own. Stop trying to reinvent the wheel and stop being so greedy and don't want to share your first few commissions. Don't look at it as sharing your commissions. Look at it as investing in your business. You're learning the game the right way from the start, not at the end. Because it's just as fast as you get your license, you can get out of the business even faster if you don't know what you're doing. But a lot of real estate companies, they have some really good training programs. So I do suggest you go through those real estate training programs. But more important, connect with the realtor, a successful realtor that's willing. I know if you're a Coldwell Banker realtor, they give you this guide when you first start, and it lists their agents that have mentorship programs. And just look into that. Don't be afraid to start out on a team. Teams are amazing. I love teams. I actually just joined a commercial and residential real estate team myself because I know my lane. I don't do residential at all, but my partner Scoop, he gonna get you right. If you call me for residential real estate, I'm gonna refer you to my partner because that's not my lane and I know my place. In residential real estate ain't it. I'm not about showing those 50 houses. I'm not about the open houses. I'm not about riding you around in my truck, waiting on Kiki, Boo Boo, and your whole family to come. No, I'm not about that life, y'all. I do commercial real estate only. If you're looking for investment properties, I'm your girl. If you're looking for your dream primary residence, Scoop is your boy. He's the king of closing, and that's who you need to call, not me.
Yes. But the point of the matter is, I mean, again, you have a team of girls that are well connected. If we don't know the answer or if we're not doing it, then we have a network that we can refer you to. This is great, guys. I love it.
Yeah, this was really good. Y'all want to kind of tell them when they should call RETAG at what point in their careers or in their life when they're having issues? When should they call RETAG? When should they call RETAG and when should they call their CPA?
You want to take that one?
I think that's a good E question because she was kind of a little earlier.
When you should call your CPA and when you should call us?
Yes.
You should never call your CPA. You should just call us. I don't know.
Okay.
And then we'll tell you to call your CPA.
Y'all know we're crazy. We're very human. Tell it, E.
The thing is, we can help you from the beginning to the end. CK, I had something else I wanted to tell you as far as what you should be doing. I know we're almost at the end, but the first thing you should do is have a business checking account and use it for business purchases. Do not commingle funds. Please don't do that. Get QuickBooks, request training from somebody, and keep your receipts. I'm going to tell you those 3 things. Those are 3 things you can do. But honestly, we can help you from beginning to the end. Like you want, and personally, I don't like using different people for different things.
Yes.
I don't like, I want to talk to one person who can help me with everything. I don't want to have to go here to do my payroll. I got to go here to do my this. I got to go here to do that. I just feel like you need one person. But we are here primarily for your tax issues. But we want to make sure that the goal is for you not to have them.
Right.
But if you do have them, we are here. We would love to help you, but we don't want you to have them. So we can help you from the beginning to the end. I'm never going to say go see somebody else.
Just back off of what E said, like I agree. We can help you from beginning to the end. We do business consultations. If you are in tax trouble, we have a system. Systems are important. We have a system that can get you out of tax trouble. Once we get you out of tax trouble, we're going to do some tax planning. There are a lot of tax professionals that don't even know the meaning of tax planning. That's another reason why you have to be very careful about who you choose as your tax professional. RETAG can get you out of your tax issues. RETAG can set you up with the tax plan. We do tax planning, and we also can make sure that your business has the correct entity and that you're filing your taxes appropriately. So I'm with E. I don't suggest you call nobody but RETAG.
All important things. And again, CK, I expect to see you calling our line today. It almost makes me want to cry, because when you have a team of folk that's spitting free knowledge, like when are we going to get out of not listening? But guess what? If you don't want to listen and you want to represent yourself to the IRS, we'll email it to you.
Ooh, that's it. So a lot of people ask, can I do this myself, MJ? I can't afford you all. How can I get this resolved myself? Yes, there is a roadmap that we can send you to help you get your issue resolved. You see that map that Nat is holding up? There are over 1,000 things on that map, but that's the roadmap. So that's what when you come and see us, that's what you're paying for. We have an expert in each station to include litigation. Our tax attorney, Josie, handles litigation. So if for some reason we can't resolve your issues as enrolled agents, you got to see our tax attorney, Josie. But guess what? That's RETAG. You don't have to go and see nobody else. It's all
like the Walmart of tax.
He's our referring attorney. Josie is.
Yeah, like the Walmart of taxes.
I know the whole approach.
Tarjay. I don't know Walmart no more. I'm gonna say Tarjay.
Okay, well, Tarjay.
I pay those extra few coins to get some good service and get somebody that's actually ringing my shit up. Because now Walmart have you working.
Yes.
I said, I don't want to go and work.
Right.
Unless y'all gonna give me a W-2 or 1099 when I file my taxes, I'm not doing no work.
Come on here.
Okay.
Okay, y'all. We are at the top of the hour. We're actually a few minutes over, but we started a few minutes late, so we are just about evened out. Next week, next Wednesday, we have a lot of more tax tea for you all. We're going to be talking about Wesley Snipes' tax case. So if you all get a chance before next Wednesday, before you tune in, so you can follow us, try to go back and Google the issues that Wesley Snipes had. Although he's a celebrity, regular normal people, they have those same kind of issues. And Josie, what was it? The OIC? What was it that Wesley Snipes tried to do?
Yeah, well, he got indicted. Well, he settled for, and he went to jail for tax evasion as well. And then after he got out, he still wanted to do an offer and compromise. And so we're going to talk about that because we're going to talk about an offer and compromise.
Yeah.
And, I think he had like $6 million and he wanted offer and compromise. So
our offer and compromise is kind of like when you see those commercials with people selling for less than they owe. That's what Wesley Snipes tried to do. Like, oh man, you got all this money and you're trying to sell it. Yeah, I guess, but we'll talk about it next week, and we'll be able to kind of dive a little bit deeper into the different solutions that we have for your tax issues. We do lien release. We do if you have a wage garnishment, we can do that. I actually got a phone call this morning right before we started the show. A realtor in another city. She got her big commission check this morning. And her wages were garnished. So I'm gonna touch on that a little bit next week, y'all. Please get those issues taken care of, because if you don't, the IRS is not gonna stop. I promise you. They're gonna be like a net, like until you kill it, they're gonna be there.
You take the net, you be like this.
I'll be good to the docket. And every morning you wake up, you checking your bank account, making sure that they haven't put a hold on your bank account, and you mess around and book that trip to Africa, find out that the IRS and snatch that damn passport, because they can do that too.
Yeah, they sure can. They will snatch that passport.
And the key is, like we've been saying, they already know. And listen, girls, have y'all seen that the IRS is hiring out the wazoo? I just told my son the other day, go on and apply. They are going to get their
and they're not hiring to make new friends. That's not what they're hiring for.
No, and they train them, right? But they'll know more than REALTORS. But we'll talk about all of that as we do our lives. You guys like, share, and post. Be sure to go check our Facebook page. Yeah. And now you've heard that we're doing our lives every Wednesday. Hey, time is money, and we're doing this for free and spitting free knowledge to you guys. Make sure you carve out the time as well to look at our lives, so you can learn different things and follow up with us, be able to follow along with us. Yeah. MJ, you want to close us out?
Yeah, you've pretty much touched on everything. One thing I do want to piggyback on you behind is when you said the IRS train them. Let me tell y'all something. We train them. People like me and E and other enrolled agents, and even Cassie and Nat, when we call in, half of those agents don't know what the hell going on. I promise you.
They're like, we can't do that. I have no idea what you're talking about.
Yeah, if you're seeking assistance from the IRS, baby, you better off
call us. Because we're gonna tell them what they're going to do and what's not going to happen. Call us.
Yeah. Mm-hmm. Call REALTORS. That's end of questions. All questions. Call REALTORS.
I love it. I love you guys. Have a phenomenal week. Your beautiful selves.
Bye.
Bye, guys.